Did you know that 60% of all baby boomers are actually sitting on a literal gold mine? Most of them don't even realize it. Today's video, we're going to talk about that. We're going to talk about some of the different issues facing the baby boomer generation. You know, the great debate: do they sell? Do they not sell? Do they stay? Do they upgrade? We're going to unravel some big issues that the baby boomer generation is facing in the housing market for those born between 1946 and 1964. Stick around to the end, because I'm going to reveal one strategy that could potentially transform your real estate decisions, ensuring a comfortable and financially secure future for those that are in that baby boom generation. So you're a baby boomer, or maybe you're just curious about the market trends. The big question: do you cash in and sell, buy a new property, or do you rent? But there's more to it than just that. So I'm going to dive into a couple different factors that are going to help you decide, especially if you're a baby boomer, but also if you're curious about the market trends. It's going to help you understand what they are thinking and what some of the possible solutions are that baby boomers have to take advantage of the situation that they're currently in. The fact of the matter is most baby boomers are on a fixed income, and with the cost of living skyrocketing through the roof, there's going to be a need to either pull out some equity, to sell the property, and consider renting. Many of you have spent years in your home, perhaps decades, and you've been building a huge nest egg of equity. But more importantly, you've been building memories. You're at the crossroads. Do you stay put? Do you upgrade? The home that you've raised a family in, do you pull cash out? Do you fit it so you can move around the home and not have any issues? The fact of the matter is, we're getting older. So the question becomes, are you trying to pull that cash out, or do you cash out entirely and go rent? Or do you actually access your retirement fund? We all know interest rates are through the roof as well. So, we need to figure out if it makes sense. Do you leverage the home? Do you take advantage of a mortgage, whether that's a home equity line, a cash out refinance, or a reverse mortgage? Stay with me. We're going to talk about all three. All right, so first up, the cash out refinance. This allows you to replace the current mortgage with one that has a larger amount. Now, many of you may not have one, but you take out the difference in cash. It's literally hitting the reset button on your mortgage, but you're pulling out some extra funds in the process. Then, of course, there's the home equity line of credit, otherwise known as a HELOC. Think of this as a line of credit, but the home's equity is your credit limit. You can borrow as much or as little as you need, up to the amount of equity you have, and you're going to be capped off at 90%. And for those that are currently in retirement, or 62 or above, you're in a unique situation. You can take advantage of the home equity line of credit, the cash out refinance, and a reverse mortgage. A reverse mortgage allows you to convert part of your home equity into cash. The best part: there's no monthly payments. But remember, it's essential to understand the terms and the conditions. A reverse mortgage is not for everybody, and many folks have a lot of misguided and misunderstood feelings about reverse mortgages. They really are a phenomenal option, but again, they're not for everybody, for sure. Now, each option has its pros and its cons, whether it's the flexibility of a home equity line, the lump sum from a cash out refinance, or the retirement benefits of a reverse mortgage. The choice is deeply personal. Your home is more than just bricks and mortar. It's a financial asset, and that's something you need to understand. And with the right strategy, it can help you achieve your dreams, whether it's renovating your current home or setting off on a new adventure. Now, I will say that it is an asset, but it is an asset that no matter what, you are going to have expenses. You're going to have homeowners insurance. You're going to have property taxes. You're going to have maintenance, possibly HOA. But the fact of the matter is, you need a place to live. And I don't know the last time that you checked on retirement living or assisted living. If you're at that point, it's incredibly expensive. These options will give you a phenomenal choice. And that's what it's all about: having options and having choices. For those of you that have joined us in the past, thank you. For those of you that are joining us for the first time, thank you so much for spending the time. Please consider subscribing and liking. From the bottom of my heart, I promise you this means a lot to me. I'm not just doing this for the heck of it. I really do have a passion to try to educate, and I'm hoping that YouTube will be that platform for me going forward. And every like, every subscription, everything helps. Every thumbs up. So I appreciate it. Thank you very much. Now let's get back to it. Well, certainly nothing is free, and the cost of refinance is absolutely not free. Well, just like your original mortgage or any other mortgage that you've done, there's definitely going to be costs involved. Typically, these can range from anywhere from 2% all the way up to 6% with the cost of financing anything these days. So, but we're going to make certain we weigh the options. We're going to do a cost analysis and determine if it makes sense for you. You do have the ability to roll these costs into the mortgage, so you're not actually coming out of pocket, but it is an expense. It is something that you're financing in, and you're going to pay interest over the time that you have that mortgage. Now, as far as the process goes, it's again very similar to any mortgage that you may have taken out in the past. You're going to go through an application. We're going to do a credit check. We're going to do an appraisal. There's definitely a great opportunity. We're going to get what's called a PIW, a property inspection waiver, but there's absolutely no way to tell you until the application has been complete. The lender, I want to ensure that your home's value justifies the new loan amount. So that's the collateral. We have to have an appraisal. We have to have value. The timeline, it can vary, but typically a refinance will take anywhere from 30 to 45 days. In today's world, less than that for sure. Contact your lender. I can certainly help you with that. Don't hesitate to reach out. So is a cash out refinance to you the right option for you? It's a personal decision, but you're armed with some options. You're armed with some education. So hopefully it'll help you understand what the best situation is for you. Please leave me a comment. I'm happy to answer any sort of questions regarding a cash out refinance. When it comes to tapping into your home's equity, the home equity line of credit, or HELOC, it's not just an acronym. It actually stands for Home Equity Line of Credit. Is a great function. It's a great opportunity. A HELOC, or Home Equity Line of Credit, is a bit like a credit card, frankly. It allows you to borrow against the equity in your home, giving you a revolving line of credit to use as you need. You can borrow, pull from, pay it back as many times as you like over the initial draw period. And it has two phases. You have the draw period and the repayment. Typically, the draw period lasts around 10 years. And again, you can pull from and pay back as many times as you like over a 10-year period. And then when it comes to your payback period, that's when the draw period concludes. The home equity line of credit turns into an amortized loan. Now, there's some flexibility here, but oftentimes you're going to see this set at 20 years. That's typically for most people, they prefer to amortize it over a longer period of time, so that way it lowers their monthly payment. But certainly, if you choose to reduce that term, it's definitely going to be an option for you as well. When it comes to interest rates on a home equity line, it's typically based off the prime rate plus a margin. The margin is influenced by various factors: your credit score, loan to value, debt to income ratio, all play a role in determining the margin. A better credit score and lower debt can often secure you a more favorable rate. A HELOC offers flexibility, but it's essential to understand its mechanics. With this knowledge, you're going to be better equipped to decide if it's the right financial tool for you. Now, when it comes to the process of a home equity line of credit, it's going to be very similar to a cash out refinance or any purchase that you've done in the past. There's going to be a mortgage application. There's going to be credit pulled. We're going to evaluate your income. And there's also going to be something done to determine the value. And I say that because a lot of times we pull what's called an AVM. And essentially, that's an automated value that determines what your property is worth. And if we're able to pull that using while we're processing your home equity line of credit, we will not need an appraisal, which will save you a couple $100. As far as turn times, again, it's going to be very similar to any sort of purchase or cash out refinance or refinance that you've done in the past. It's going to take about 30 days, can take up to 45. But the reverse mortgage, a topic that sparked many a debate and is shrouded in so much misinformation. It's unbelievable. Ronald Reagan signed this into law in 1988. He and his team had the foresight to understand that most seniors will have the majority of their wealth tied up in real estate. Well, turns out he was right. With the cost of healthcare, retirement communities, and the thought of moving into your children's home, the reverse mortgage is an option. The money can be used to pay for in-home care or fit the home for folks that have any sort of disability to help them navigate the home or just old age. And it's at its core, the reverse mortgage allows homeowners, seniors 62 or older, to tap into their home's equity without selling the house. Instead of making monthly payments to a lender, the lender makes payments to you. Yes, that is an option. The bottom line, you have options. When you're close to or at the age and you're on a fixed income, this can be an invaluable tool to use as an asset to your advantage. So, how does one get started? First, counseling is mandatory. This ensures that you understand the product. Next, you'll complete an application, undergo a financial assessment, and then get your home appraised. Once approved, you have options. You can opt for a lump sum, establish a line of credit, or choose monthly payments to be sent to you. You can even mix and match these options based on your needs. But what about costs? Again, like any mortgage, there are closing costs. These might include origination fees, appraisal fees, insurance premiums, and more. It's crucial to factor these in when considering a reverse mortgage. It's essential to remember with a reverse mortgage, you're still the homeowner. You're responsible for property taxes, insurance, maintenance, and the loan becomes due if you sell the home, move out, or upon passing. Contrary to popular belief, the bank does not own your home. Your heirs can still inherit the property. They have the option to pay the reverse mortgage back when the home sells, or if they refinance it. Just like any loan, it needs to be paid off. If there's equity remaining, your heirs will receive that equity. Listen, I'll be the first one to tell you a reverse mortgage is not for everyone, but it's not the villain many make it out to be. With the right knowledge, it can be a valuable tool in your financial toolkit. And if you're wanting to keep those funds, if you are lucky enough and you put money away and you saved, you can use your equity as an asset instead of pulling money from your retirement funds. Look, there's a lot of information out there. The landscape of financial decision making is vast. Knowledge is your compass. Whether it's a reverse mortgage or a cash out refinance or home equity line of credit, there's options that are available, especially for you baby boomers. You've got equity in your property. The cost of living is increasing. People are accumulating debt at a faster pace than they've ever had before. And baby boomers are not isolated from this whatsoever. So if you have any questions, please do me a favor, comment below, subscribe. Thank you so much for watching this episode, another guaranteed episode. I'm happy to provide you with any sort of information that you need. Don't hesitate to ask. Have a wonderful day.